Why your discipline is costing you money in trading. You are working too hard. That's the problem. 85% of traders fail within the first 18 months, and it's not because they are lazy. It's usually because they are trying so incredibly hard to be disciplined that they snap. You have a plan. You have rules. You sit at your desk at 6 in the morning, coffee in hand, determined that today is going to be different. But then the market opens. You take a loss. You tell yourself to stick to the plan. You take a second loss. Now your chest feels tight. The discipline, that iron willpower you were so proud of, suddenly feels like a cage. And what happens next is something I see every single week. You break out of the cage. You take a trade you know you shouldn't, size up to get the money back, and in 45 minutes, you undo 3 weeks of progress. Here's the uncomfortable truth I've found after watching thousands of traders struggle. Your discipline isn't the solution. In fact, the way you are defining discipline is actually the reason you are losing money. There's a specific type of psychological trap called the white-knuckle paradox, and once you understand it, you'll realize why trying harder has actually been making your trading worse. We'll get to that in a moment. Let's talk about David. David was a structural engineer. Smart guy, very organized. When David started trading, he approached it like building a bridge. He had a spreadsheet with 17 columns. He had a printed checklist taped to his monitor with 12 rules. Wait for the candle close. Risk 1% only. No trading during news, and so on. For 2 weeks, David was a machine. He followed every rule. He made money. He felt like he had finally cracked the code. But here's what David didn't know. Every time he forced himself to follow a rule when his emotions were screaming to do the opposite, he was draining a limited battery. Psychologists call this ego depletion. On Tuesday of the 3rd week, David took a perfectly valid trade. It stopped out. He felt a little twinge of irritation, but he used his discipline to push it down. He took another trade, another loss. The irritation grew. He pushed it down again. By 2 p.m., David wasn't just tired, he was psychologically empty. He saw a chart pattern that wasn't really there. It looked like a reversal, sort of. In the past, his discipline battery would have stopped him, but the battery was dead. He clicked buy. He doubled his size because he felt due for a win. He lost $4,000 in 6 minutes. This is the problem with willpower-based discipline. It works until it doesn't, and when it breaks catastrophically. I've found that profitable traders, the ones who survive for 10 years or more, don't actually use that much willpower. They don't sit there fighting themselves. Take Elena. She trades for a living. When I watched her trade, I noticed something strange. She didn't look focused. She looked bored. If she missed a trade, she didn't use discipline to hold back her anger. She just shrugged and went to make tea. She had a built-in environment where discipline wasn't required. She doesn't have her P&L visible on the screen. She physically can't see how much money she's up or down, so she doesn't have to fight the urge to protect profits. She has a daily loss limit hard-coded into her broker account. If she hits it, the account locks. She doesn't need willpower to stop because she literally cannot trade. You are trying to rely on internal strength to fight an external environment that is designed to trigger your dopamine receptors. You will lose that fight eventually. There's a way to trade where you almost never have to tell yourself no because the temptation isn't even there. But to get there, we have to look at the second reason your discipline is costing you. I'm going to bet you're an intelligent person. Most people drawn to trading are above average intelligence. They're engineers, coders, entrepreneurs, doctors. And that intelligence is exactly what is killing your account. There's a phenomenon I call the white-knuckle override. It's a specific behavior pattern that destroys smart traders, and I want you to be honest with yourself if this sounds familiar. You have a rule: don't move your stop. You enter a trade. The price starts moving against you. It's getting close to your stop. Now, a dumb trader might just panic and move the stop because they're scared. But you're smart. You look at the chart and your brain starts working fast. You say, well, actually, if I look at the 4-hour time frame, the real support level is just 10 pips lower. It makes sense to give the trade room to breathe because the market structure is shifted slightly. It sounds logical, it sounds rational, it sounds intelligent. So you move the stop. And then the price smashes through your new stop and you lose twice as much as you planned. You didn't move the stop because of market structure. You moved it because you were in pain, and your high IQ built a complex, logical-sounding excuse to avoid that pain. I knew a trader named Michael who was a brilliant coder. He could rationalize anything. He would break his rules every day, but he always had a technical reason for doing it. He wasn't undisciplined in his own eyes. He was adapting to market conditions. He blew up 3 accounts in 2 years. Here is the hard reality. The market does not care about your logic. It does not care about your reasons. Profitable trading often requires you to be dumb. I mean that mostly seriously. It requires you to see a signal and execute it like a robot without letting your beautiful, complex brain interfere. There are 2 types of traders who make money. The first type is the intuitive genius who has stared at screens for 20 years. That's probably not you yet. The second type is the person who is humble enough to realize their own intelligence is a liability. The best traders I know have a rule called the no thinking zone. Once they are in a trade, they are not allowed to think. They can manage the trade according to a pre-written plan, but they are not allowed to make new decisions based on new thoughts. If you find yourself using words like however, technically, or but in this case while you are in a trade, you are about to lose money. There is a specific feeling that comes right before you do this. It feels like clarity, but it's actually panic disguised as logic. We'll talk about how to spot that feeling later. Let's go back to the idea of the white-knuckle paradox I mentioned at the start. Imagine you have 2 traders. Trader A follows his plan perfectly. He waits for his setup, he risks 1%, the trade loses. He feels like a failure. He tells himself, I need to be better. Trader B breaks every rule. He enters early, he risks 5%, the trade hits take profit. He makes $2,000. He feels like a king. He tells himself, I'm getting good at this. Trader B is doomed. He just doesn't know it yet. The problem with your discipline is that you're measuring it by your P&L. You think, I made money, therefore I was disciplined, or I lost money, therefore I did something wrong. This is the deadliest lie in trading. I want to introduce you to Sarah. Sarah had an incredible month in October 2023. She made $18,000. She was euphoric. She felt like she had finally mastered discipline. She was posting her charts, feeling confident, planning a vacation. But when I looked at her trades, I felt sick. She was averaging down on losers. She was holding trades through news events. She was risking 4 or 5% per trade. She hadn't mastered discipline, she had mastered luck, and the market always corrects luck eventually. In November, the market conditions changed. The volatility picked up. Sarah kept doing the exact same things that made her $18,000 in October. By mid-November, she had given back the $18,000. By December, she was down another $6,000. She was confused. She screamed at her screens, I'm doing the same thing. Why isn't it working? She thought the money was the scoreboard. Here is a radical shift I need you to make today. If you take a bad trade and make money, you should punish yourself. If you take a good trade and lose money, you should buy yourself a coffee. I know that sounds wrong, but you have to separate the process from the result. Profitable traders don't care about the outcome of one trade. They care about the execution. If you follow your plan and lose money, that is a successful trade. If you break your rules and make money, that is a failed trade.
Because that money you made by breaking rules, it's not yours. The market has just loaned it to you, and it will come back to collect it with interest, usually about 40% interest. There's a concept called outcome independence. It took me 4 years to really get this. It means you can look at a losing trade and feel zero shame. You can look at a winning trade and feel zero pride. You just look at the execution. But how do you actually do that when you have bills to pay? That brings us to the most uncomfortable part of today's conversation. You can have the best plan in the world, you can have the checklists, you can have the alarms, but if you see yourself as a gambler, you will eventually gamble. I've noticed something about the traders making money, and it's uncomfortable. They're often boring people. When they talk about trading, they don't sound excited. They sound like they're talking about inventory management at a grocery store. You might be trading for the wrong reasons. I don't mean you don't want money. Everyone wants money. I mean, you might be trading because you want action. You want to feel smart. You want to be the hero who predicts the market crash. You want to escape your boring job. If you are trading for excitement, discipline is impossible. Discipline is the enemy of excitement.
Remember David from the first story, the engineer who blew up? We need to check back in on him because what he did next changed everything. David realized that he was addicted to the feeling of being right. He wanted the market to validate his intelligence. Every time he lost, he took it as a personal insult. So David did something drastic. He stopped trying to predict the market entirely. He switched to a completely mechanical system. If the green line crossed the red line, he bought. If it crossed back, he sold. No thinking, no analysis, no feeling the flow. For the first month, he hated it. It was boring. He felt stupid. He missed obvious moves because his system didn't catch them. But after 3 months, he looked at his account. He wasn't up huge. He was up about 6%. But more importantly, the emotional roller coaster was gone. He wasn't coming home angry. He wasn't waking up at 3 a.m. to check quotes. He had changed his identity from market wizard to system operator. You need to ask yourself a hard question. Would you rather be right? Or would you rather be rich? You cannot be both. The market is a chaotic, infinite stream of data. You cannot control it. The only thing you can control is yourself. And the moment you try to impose your will on the market will destroy you. There's a phrase I keep on my desk. The market is not a puzzle to be solved. It is a river to be navigated. We started this by talking about how your discipline is too rigid, how you are white-knuckling it. The final lesson is about the opposite of rigidity. It's about flow. The best traders I know are flexible. They have rules, yes, but they are not fighting the market. If the market changes, they change. If they're wrong, they admit it instantly. I was wrong. Those 3 words are the most profitable words in trading. Most people can't say them. They hold on to a losing trade because admitting they're wrong hurts their ego. They add to a loser because they need to prove they were right. I watched a trader named Tishi once. He's a legend in his community. He entered a position and the market immediately spiked against him. He didn't hesitate. He didn't check the news. He didn't look for a reason to stay. He just clicked close. He lost $1,200 in 4 seconds. He took a sip of water. He looked at the chart. 2 minutes later, he entered in the opposite direction. He made $4,000 on that move. I asked him later, "How did you switch so fast? Weren't you mad about the loss?" He looked at me like I was crazy. He said, "Why would I be mad? The market told me I was wrong. I listened." This is the white-knuckle paradox resolved. Real discipline isn't about holding on tight. It's about letting go. It's about letting go of the need to be right, letting go of the money you already lost, letting go of the prediction you made an hour ago that is now wrong. You think discipline means standing like a statue in a storm, but real discipline means moving like water. When you stop trying to force the market to do what you want, and you stop trying to force yourself to be a robot, you find a strange kind of peace. You surrender to the reality of what is happening right now. That chart in front of you, it's not an enemy, it's just information. So where do you go from here?
You have the stories of David, Elena, Michael, Sarah, and Tishi. You know about the intelligence trap and the ego depletion. I want you to do one thing tonight. It's a writing exercise, but don't skip it. Take a piece of paper, not a digital note, paper. Write down the last 5 losses you took. Next to each one, I want you to write why you really took the loss, not market reversed. Be honest. Was it I was bored? Was it I wanted revenge? Was it I thought I was smarter than the price action? Then, for tomorrow, I want you to make one rule. Just one, not 10. Maybe it's I will only trade between 8 and 10 a.m. Maybe it's I will not look at my P&L while in a trade. Stick to that one single rule. If you break it, stop trading for the day. No exceptions. You don't need more indicators. You don't need a better strategy. You need to stop fighting a war against yourself. Trading is the hardest way to make easy money. It forces you to look in the mirror and see all your flaws, every single one of them. But if you can stop trying to be perfect and start trying to be present, everything changes. Go write that list.